what we've seen is that once you start to see an uptick in, for example, the price of bread, that is usually accompanied by an uptick in civil unrest, as well as that of protest in these respective regions and so forth.
What are the main contributing factors to the increase in inflation around the world and here in South Africa? Well, in this extract from an exclusive client webinar, CRA senior analyst Bheki Mahlobo outlines the key driving forces behind the rapid rise in inflation. Enjoy.
And this sets up South Africa to be quite a fragile country, comparing what we're seeing between Russia and Ukraine, which has had implications on commodity prices. And this is what we've done here, just looking at commodity prices for selected commodities. Starting off by having a look at the Brent crude price, we saw a massive increase in the Brent crude price, where it was about $68 per barrel just 3 months ago to its current levels of 120 barrels per dollar. And that's largely due to the fact that Russia is the third largest oil producing nation. Other uptick in commodity prices that we've seen is what we see in wheat, which has dramatically increased. Now, South Africa does import quite a lot of wheat from Russia, and Russia and Ukraine are responsible for about 30% of wheat exports globally. Another impact that we've seen is the price of nickel, which essentially has doubled from about 20,000 to 40,000 and now has begun to decline a bit. We see the same trend in aluminium. However, I pull your attention here to the gold price. As soon as airstrike missiles were sent from Russia towards Ukraine, you saw the gold price shoot up. And this is positive for South Africa because South African exports are predominantly commodities such as that of gold. And this has led to the trade balance in the country to be quite positive. And that's what we gauge here, looking at the South African trade balance from 1994 until 2022. You're looking at a chart here which tracks imports, which you read as the red line, as well as that of exports. Since the third quarter of 2020, South Africa has been running budget surpluses, largely due to the commodity rally that we've seen over the past 2 years. And the difference between exports, which are higher now than imports, gives us the trade surplus, which you see in the shaded area. And this was, in fact, what gave Enoch Godongwana something positive to talk about in his budget speech a few weeks ago that resulted in the government to collect about 200 billion more in government revenue. However, we believe that this trend that you see here, this massive trade surplus, may begin to shift, largely due to the inflationary numbers that we see in the Western world, and central banks responding to that by hiking interest rates as well as that of tapering. But before we get there, let's have a look at global inflation, where it currently stands. And what we've done here is that we're tracking consumer inflation for selected countries from 2010 until 2021. We start off with the United States, which you read as the red line, the euro area, which you read as the orange line, as well as that of South Africa. What is interesting with this chart is that you see South African inflation has generally averaged higher than that of the United States as well as the euro area over the past 10 years. And we see it decline here, the same trend that we see in the United States as well as that of the euro area. Then we see this initial uptick in inflation levels in the US as well as that of South Africa and the euro area, to the point where US and euro inflation is above that of South Africa. This is the highest it has never before, as you can see in this chart, developed a nation's inflation being greater than that of South Africa. Current inflation levels in the US is in fact the highest it's ever been in 40 years, which is of particular concern in that country. What is also of particular concern in the euro area is its reliance on natural gas coming from Russia, which has resulted in a massive uptick in electricity prices in that region, which you gauge as consumer energy prices in the euro area. And what you see here is this massive uptick in consumer energy prices to the point where they currently reach about 30%. I can see this in Germany as households are quite particularly frustrated with this, and I can see that certain European nations are now moving towards having less reliance on Russia for natural gas. If you saw last year, the common theme among central banks was that this inflationary levels will be temporary, as they called it, transitory. However, we believe that this inflationary level will continue for a really long time. And that's really largely due to what we see in supply chains, rather supply chain dislocations, which you read looking at the Global Supply Chain Index from 1997 until 2021. Now, this is a recent indicator that was developed by the Federal Reserve of New York. And what it explains to us is the pressure, as well as giving us a gauge on the supply chain dislocations that we have seen over the past year. What you see here is that you see a decline in the pressure of supply chains, and you see this rampant increase as the world opened up. And this suggests to us that as you see these elevated pressures on supply chains, suggests to us that inflation may continue for 1 or 2 more years. And we believe here that the conflict between Russia and Ukraine will also continue the trend that you see here, where you see supply chain dislocations being at elevated levels. Another marker of why inflation may be at a higher level in the coming years, or 1 or 2 years in the medium term, is when looking at producer inflation for selected countries. Now, producer inflation, we read it as a lead indicator, as what happens from the production side of things is then passed on to the consumer. And what we've done here is that we've tracked producer inflation since 2013 until 2022. And we've done that for the United States, which you read as red, the Euro area, which has had a massive uptick in producer price inflation to the point where you see it at 30%, never seen before in the European area, as well as that of South Africa, which now tracks at about that of 10%. Now, this is also another indicator that we're still going to see higher inflation levels in these respective regions, which means that consumers will be squeezed, unfortunately, in the medium term.
So Bheki, I mean, the Federal Reserve has said that inflation is going to be transitory, but yet it still keeps going up. I mean, why have experts got this so wrong? Why are we seeing this rise in inflation? And also, why is that so damaging for individuals to see that shrinking in their spending power?
Yeah, right. Now, an important thing to note about inflation is that it simply cannot occur without stimulus. What we have seen over the past 2 years from the Western world is a massive quantum of stimulus levels, which I will show to you later during this briefing, as well as the lowering of interest rates. Now, that had the impact of sending cash towards, for example, in the United States, sending cash towards US citizens, as well as that of them now spending it in the US economy, raising prices. Now, the consequences of inflation is that it erodes the purchasing power, for example, of the dollar, as well as that of the rand. It costs you more and more as the time goes on to buy the same level of goods as you did the year before. And a particular of concern here is that what we've seen is that once you start to see an uptick in, for example, the price of bread, that is usually accompanied by an uptick in civil unrest, as well as that of protest in these respective regions and so forth. Now, the response from central banks in regards to these elevated price levels is to then begin to taper.
Thanks for watching. Did you know that the CRA has a members-only section of the channel? For 99 Rand per month, you can gain access to the full recordings of our exclusive client webinars. We will also be live streaming future events as well. So if that interests you, please do hit that join button down below. My name is David Ansara. This is the CRA. Until next time, take care.